right, I'll say it again. Okay.
Okay.
So I'm just summarizing payroll. So a payroll provider is only caring about the wages that an employer pays to their employees. Okay, the payroll provider doesn't know about the bills that we need to pay for health insurance, vision, dental, medical. They only know employee pieces of that. So we set it up to say, the company will set up like Gusto to say, I need to pay this employee X amount of dollars. This is their salary. This is how much needs to come out because the employee's paying taxes. This is how much needs to come out because the employee is making a contribution. And this is how much needs to come out because the employee is paying their health insurance. And then all that comes out from their gross wages, that goes away. And then the employee gets their net wages. Okay. The things that come out of their paychecks that I just explained, I guess, are deductions. And deductions are synonymous with liabilities as far as accounting goes, because a deduction is money that was paid in wages, like the client is recognizing it as wages paid, but they're never sending it to the employee because the employee wants it to go to pay health insurance or wants it to go pay 401k. Right? So the employer is helping the employee by saying, we will pay these for you, so you don't ever need to even think about it or worry about it. So we're going to just not pay you the money, and we're going to send it to the health provider, and we're going to send it to the 401k holder. Right? Can you follow that? That makes sense? And that's a deduction. And that's why it's a liability, because we say, we're telling you we're going to pay it for you. So it's a liability. We owe this money. And then when we actually pay it, we reduce the expense hits that and we reduce the liability. What trips people up in payroll, so we just talked about deductions. There's now contributions. Maybe you've seen this word. Contributions in accounting are typically synonymous with wages. These are the employee portions of things. And maybe that gets a little confusing, but like, Madeline, like, you need to pay taxes on your wages. Like, that's, I'm weekly accounting. I see that as wages. The taxes you paid are your taxes. I don't want to get too deep into this, but typically contributions are employee portions of it that I, as the company, and how we treat our clients, we typically just see it as wages. Deductions are employer related, that we pay on behalf of the employee or pay for the employee that we owe and are typically liabilities. That's really it. So I guess really I'm just giving it, like, Jonah, I'm going to you again because you raised this issue, but now that you've seen how it looks when we net it all together on the income statement, maybe this is something you can start recommending if if you're seeing the balance sheet get out of sync. Because I'd rather show the negative piece as a line item, but like the expense account is still positive and makes sense.
Yep.
Okay. Cool. Payroll's complicated.
It is.
Payroll is definitely very complicated, and that's why I worked in public accounting before this job.